Happy Thursday, guys. Jess here. Today, we're going to talk about credit. So credit is probably the number one thing that you should be thinking about when you are anticipating potentially purchasing a home in the future. Credit is the first thing that we look at when we are assessing someone's qualifications for a mortgage. I would say 75% of the time, 60% of the time, my clients, maybe even 50% of the time, it depends. Clients come to me and they don't have any idea where their current credit score is. Sometimes people come to me and they have an idea of where their credit score is because they monitor their credit via Credit Karma, which is great. That score is not the same score that we are going to look at when we pull your credit. So don't be surprised if you're monitoring your credit with Credit Karma that you are going to see a different score when we actually go ahead and pull your credit. Main reason being is because that score is based on consumer credit. So I'm going to take out a bank card or a retail card for a credit card. You're going to be lent a little bit of less money, right? So a smaller limit. It's really important that you understand that there's 2 additional layers of credit past that. So the second layer is installment credit. That's for like student loans or auto loans are the 2 best examples. And then the third option or the third layer is mortgage credit, so also known as your FICO score. So being lent the largest amount of money, and it is going to be graded the most stringent. So typically your scores are a little bit lower when you apply for a mortgage than what you see when you're monitoring it via your credit card apps. It's really important that you know also that you have access to your credit report. You can do a full credit report once a year and see what's on your credit. I would highly encourage you to take the time to go to annualcreditreport.com and pull your report. You can pull for Experian, Equifax, TransUnion, and see where you're at before you even get started in the process. A lot of times there are things on your credit report that you don't even know are there. So it's really important to pull that report and see where you're at in the process and what's on there, and if there's anything that needs to be addressed or fixed before you get started on that process. Is there a medical collection? Do you need to bring down the balance of your credit card? So let's just say you have a $1,000 credit limit and you've got that maxed out. That's going to impact your credit score. So would it make sense to pay that down a little bit and get that under that 30% utilization of your available limit? That is always going to help improve your score, not using or maxing out your credit limits. So take a look at annualcreditreport.com. I do have some credit resources if you want to see what makes up your credit score, but credit is money in your pocket. It's going to give you the best terms of your mortgage, your best interest rate. It's going to give you options, more options towards loan programs that may work for you, or it'll give you more scenarios that a lender can put you in from a product standpoint. So you don't have to automatically assume that this, FHA is the only loan that you can get, or conventional is the only loan that you can get. There are other loan programs that are available that may be more suited for your needs. So if you have any questions about credit, give me a call, annualcreditreport.com to see where your credit's at. And I look forward to seeing you guys next week. Don't forget to like, share, comment, subscribe. Love your feedback. Super excited that you guys are all here, and I'll see you next week.